In this video I'm going to be going over a trade I took on GBP USD during the London session this morning. So as you can see on the charts, here we have the trade. We ended up making just shy of $800 off of the trade. So I'm going to use bar replay to go back to the start of the session, explain my analysis and reasoning for the position, and look at where I got my entry. So with that said, let's jump onto some higher time frame analysis on the 4-hour time frame. In not so recent structure, huge downtrend in GBP USD. As you can see, we've been selling off for a very long time. More recently, if we look at the past sort of few days, we've started to break structure to the upside. As we can see, we had this initial break structure here, retracement into the fair value gap, followed by another break structure, a third test of the fair value gap, and another breaker structure. Coming into London Open, we just had a pretty strong impulsive move and a rejection off of these previous wicks we see here. Moving to the 1 hour time frame, as you can see, we've had this breaker structure to the upside just before Asian session last night, followed by just general consolidation during Asia. Now if we look at what we see here, we've got a range during the Asian session between this sort of level here. So between these two zones we had this build-up consolidation, and pushing into pre-market of London in the early hours of the morning, we saw it start to sell off and look to fill this imbalance that we've created here. There was also an order block, breaker block, whatever you want to call it, in the market, which I've marked out in the blue box. My idea for the session was that we would come down after this consolidation, sweep liquidity, probably test into this order block, and then look to push higher up. Now moving to the 30-minute time frame, we can see that the market is short-term bullish on this time frame. So we were looking to trade with the trend. Coming off of Asia and into the pre-market, we pulled into this fair value gap, which also co-aligned with our breaker block, order block, whatever you want to call it, in the market. So this fair value gap, as you can see, was created by the imbalance we saw at the market at 6:30 last night. Pulled into it, and if we drop to the 5-minute time frame, we'll get a better idea of our entry. So we had these three fair value gaps. If we just mark out each one, we had this first one, second one starting here, and the third one down here. We also had equilibrium of this short-term move right around where we opened at market open. So here we go. The market opened here. We initially saw a sell-off into this order block on the high time frame, and moving forward we consolidated around that area, which was also within the fair value gap we see here. As you can see, we had the blue lines represent this fair value gap, and we filled it. So following this, I was waiting for a long position, waiting for a good entry to take a long position. So at this point I'm looking for an entry, and we currently have our breaker structure level at this point here. The market then takes that out, creates a new breaker structure level which is slightly higher, and creates another one further down here. At this point I did not enter. I had enough confluence to enter, but I wanted to wait for a push up and then a retracement, and I wanted to do that because we had this area here which seemed pretty significant, and I wanted to make sure we didn't just wick up and then sweep the liquidity and come back down. So what I did instead was wait for a high to be created, and as you can see, we created this little high, wicked into it. So I then drew out equilibrium of this shorter move because we had the confluence of the breaker structure that we can enter. So I waited, and I actually had my order filled here. So my stops were at the bottom of the lows here, and my targets were right at the top of the move. Let's pull this across. So here we got entered by the wick, and the market continued to play out. It didn't quite take out the highs we saw here. As you can see, there was no real closure above the previous wick to count it as a breaker structure. But following that, we ended up continuing moving up and hitting our targets. All in all, I'm pretty happy with my trade. I think the retracement into equilibrium was a good idea. We could have taken it off of the initial breaker structure, but that additional confluence was a little better. Now, Usually when I trade, I put my stops at the recent low, which would have been here. Of course, if we did put stops just below the recent lows, it wouldn't have been a 3 risk to reward, it would have actually been a 5.68, which would have made me a lot more money. But I'm still happy with how the market moved, and I'm being extra cautious by just putting my stops below a lower low isn't something I'm necessarily unhappy about. I think it was quite a good idea. Had the market come down and retested into the order blocks within this, maybe it would have taken it out and then retraced back up. It didn't, but there was still a chance it did. So that was my reasoning for putting stops there. In total off of this trade we made $800.